And welcome back to Bitcoin Advisors channel. My name is Chris, bringing it to you here from Westlake Village, California. Today is Thursday. We had some economic data come in regarding jobless claims and housing. I'll go over that in a minute, but I know what y'all are here for, and that's the Bitcoin price action. And I'm going to make it real short and sweet here today. Taking a look at the daily CME signal that we've been following up on over the past few weeks, few months. That is going to be our momentum versus a volatility indicator. And the way this indicator works is when volatility expands, we expect the price to go in the direction of the trend or in the direction of the stochastics. More specifically, that's typically what will happen. And how do we read this indicator? Well, we want to see this get above 20 percentile, and essentially the BBWP, which is the blue line, to get above the 20%. And the second part of the indicator you're going to want to look at is the momentum indicator. Currently, momentum is to the upside as long as Bitcoin is closing dailies above 19,127. And that is on CMEs. The symbol is BTC1 exclamation. Why do we look at the CMEs? That's where the most professional traders are for Bitcoin. I couldn't say the most, but the largest U.S. futures contracts are run off of that exchange. Okay, so what did I want to get at is that we have no signal. More of the same, more stuck in the mud. Here's the range on the daily time frame, and that's 20,170 to the upside or 18,500 to the downside. If you're going to use candle bodies, I think that will get the next move. And why is that? Well, if you take a look at the Bollinger Bands, and we've been talking about that, this is this indicator in not in graph form, right? This is the actual Bollinger Bands, which are very tightly squeezed right now on the daily time frame. And typically what you will see is when you get a candle body closure above that Bollinger Band, you're going to see a move to the next pivot on the on the outside shoulder band or the bottom side shoulder band. So a daily closure above or below this region is only going to get us a move to this area. Now, for the big move to happen, we're talking about 25 to 40%. You're going to see really going to need to see a daily closure above 21.5 or below that the last prior wick right here. And that very, very likely, and it's actually really easy to measure out the targets using the Bollinger Bands in this way. So again, daily closure outside of this range, we're getting to this range, right? Daily closure below here, we're getting here. So here's where the big move likely happens. And here's how something like this could and typically does go, but you get a break from here to the upside, then you retest the breakout level, and then you get the big move, and then vice versa to the downside. You typically get something like this. Boom, boom, retest the breakout area, and then you get the big move. And that's what we're going to be looking for, and we're going to use some indicators to mediate when that move is likely to happen and the direction of that move. And I think you'll find that this strategy is very, very accurate. Again, not investment advice, not financial advice, but I want you to have the same indicators I have, be able to use them to your own ability, and learn over time. So that's why there is a free link in the description below. By the way, if you like the video, smash the like button, hit subscribe if you're new. And yeah, I'm trying to narrow down, because everybody wants to know, when is the move happening and what is going to happen. And as long as this daily trend line is holding, so I'm going to clear up the chart. clearing up the chart. But as long as that daily downtrend is in effect, right, you're going to expect when we do get the volatility swing, right, the volatility increase, we're going to expect the price to go in the direction of the trend. That's typically what happens. That's where the bigger moves are, is when you trade with the trend, not against the trend. Not to say you can't get a bear market rally. And very, very likely if we start breaking above these regions, again, that'll be your first warning indicator, you know, call it 20,500. Second, kind of nail in the coffin for some upside price action, that daily above 21.5. And below here, it's going to start moving really fast. And, you know, you can actually see that probably lines up right with this trend line as well. So how do you measure a descending triangle? You want to measure from the 50%, and they typically break when they are 75% full. So that target brings you down a little bit further at 13.2. And so we are just at the 70% here. I mean, we are more than 75% full. This move has been baking for some time. That's why I want to give you some clear levels to keep your eye on going forward. And yep, so the daily time frame is going to get the price action first here. The 2-day, here's kind of the difference. The 2-day is going to be a more powerful signal, and the directions of the Stokes will cross up today with any kind of a closure above 19,174. We are currently below it. So if you ask me about today's price action, as I looked at it this morning, it seemed like a bit of a fake out, a little bit of a pullback up. You got the silver cross on the 4-hour to the downside, and that's typically where you will see the lower highs come in. You know, just using a simple fib right there. So, yep, pretty much came up to the 618, got rejected. So the big, you know, the chart to rule them all, again, King Dollar here. King Dollar did put in a lower high. And that's what I was saying about today's price action, is it looked like a backfill of yesterday's price action. A little bit of a fake out. So again, as the dollar goes down, risk assets go up, vice versa. When dollar go up, like yesterday, risk assets took a big hit. A lot of the altcoins are starting to get damaged pretty hard. So another big indicator that that next move is taking off would be a daily closure above, call it 114. I'd be looking for the dollar to make some new highs and head up to that target of 117. How did we get that target? I believe it's off of this retracement. Yeah. So again, short-term target on the dollar, if we start closing above 114, would be up towards that 117 target, and that would most likely initiate that. That could be the catalyst. If the dollar starts getting bullish over the next couple of days. Why? Well, economic news that came out today. So I'm just going to give you my quick version of this. Initial jobless claims came out lower than expected. So that would have been bullish for the dollar. This came out, you know, jobless claims 4-week average lower than expected, and continuing jobless claims came out higher than expected. So that would have been bearish for the dollar, a signal that the Fed is, you know, doing what they need to do to fight inflation, and that's make people more out of work, right? If you got more jobless claims, that means there's more people out of work. Fed's kind of doing their job, and that number did come up a bit higher. Another thing to note, existing home sales was came in at negative 1.5%. So existing home sales month over month average went down. So another sign Fed's doing their job. Real estate is slowing down. And then existing home sales, the expectation was 4.7. We came in at 4.71. So still sold slightly more houses than expected, but still less than the prior month. So just some things to be keeping an eye on. Economic data coming in for tomorrow. Fed Jefferson speech, Fed Cook speech, the monthly budget statement, and Fed Brown statement. Oh, that sounds very exciting. Very, very exciting. So no significant economic data coming out through the end of this week when it comes to Fed announcements, but we should have some more earnings reports that come out, which I don't know if you guys saw. Tesla's earnings came out worse than expected. Apparently they're having some trouble building all the cars, but Tesla getting wrecked here. One of the best companies in the country. Still holding it up relatively good in comparison to things like Nike and Facebook and Roku. Absolutely getting slaughtered. Verizon slaughtered. Uber slaughtered. Apple is holding it up like Tesla and Microsoft. And I think I heard news yesterday, Microsoft and Facebook basically just got in bed together. I'm not surprised to see Bill Gates and Mark Zuckerberg. I don't know him personally, but Bill Gates' idea of, hey, you'll own nothing and be happy in 10 years and you're going to eat a bunch of fake cows and, we gotta save the earth from the cow farts. I don't buy it, and I think it's a big crock of BS. And I'm going to continue to eat my steak, but taking a look across the markets, Microsoft and Apple are holding up the stock market, and that, if you start to see those ones go, it's not going to look good. Amazon down 40, it was down 40% or 45%, 48%. So a bit of a relief rally. Another point for the bears is it looks like the 2-year, the 10-year, and the 30-year are all up today. So point for the bears there. And then Dixie is holding on. And here's what I would say about Dixie. Couple things. On the daily time frame, I think we just went over Dixie as well. So I'm sorry to redo it here, but this is very important. Whatever the dollar does, the rest of the market is going to do. And are we already getting a test of that trend line? Let me put this on the auto. Yeah. So going back all the way to here, this trend line has been very strong and picking up bounces over the past few weeks for the dollar. Now, if we start to break below the 382, below this trend line, I would be looking for a greater move down. And again, I suspect 111, possibly even 108 could be in the cards if we start to close and maintain dailies below there. And that would align for Bitcoin having a 25% bounce to the upside. I said it yesterday. I think if we have the move to the upside, likely results in probably a 25% bounce to the upside. If we get the break of the range to the downside, that's probably going to be a 40% move to the downside. Just my opinion, not financial advice. Let's bring it back to Ethereum. What is Ethereum doing here? So again, you have the impulse move down here and the retracement. And this was a perfect silver cross retracement. That's what you're looking for. And how would you have traded this silver cross? Well, you would have put your entry right here, your risk management above the prior wick right there. So the wick, you know, below the cross, which could be this wick, you would have got stopped out. The greater wick probably would have been a better opportunity right there. And here's why, and here's how you could potentially mediate this using that Fibonacci retracement. Yeah, so you would have wanted to have it above the 618 at a minimum, or above this wick. Needless to say, playing out for a bit of a short-term move. So perfect retracement, tested the 618, getting rejected on the 4-hour. What our stochastics are up above 1276. So we got 3.5 hours left on that. Is there any bearish divergence coming back from this pivot right there? Nope, that is a closing higher high, so that won't count. Hidden bullish divergence. So I think Ethereum is pretty much in the middle of the sand as well. And it's going to do whatever Bitcoin does, but more. So let me get the daily time frame, the Bollinger Bands out. And this is just a really easy way to grasp the greater move for Ethereum. The same thing is happening. The Bollinger Bands are extremely tight. And you can see this right here. You know, I'm going to put that one right there. I'm going to put this one right here. And a daily closure above or below there, very likely going to get you a move. Well, to the upside, it's showing a significantly move higher. You know, all the way up to the purple 200. And to the downside, not as great of a move, only down to this pivot right here. I think that is the one in the sand. So let's just see, you know, vote in the comments below. Do you think we're going to get the upside move on Bitcoin or Ethereum, or is it going to be a downside move? I want to hear what you guys think in the comments below. You know, what do you think is more likely to happen? We hit 1100 on Ethereum first, or 1785. Interesting. I'd be interested to hear what your guys' thoughts are. I think that's it for Ethereum. So a closure above or below there. And just one thing I do want to say is I saw on Ethereum this. Looks like there's more of an opportunity for Ethereum to play out a weak bounce up to 1400 or even the 0.5, kind of retesting the breakdown area. That's what the price action likes to do. However, this thing's going to do whatever Bitcoin does. And as long as this trend line is holding, let's see. Yep, as long as that trend line is holding, I mean, really, for this thing to get going, the daily closure below 1250, probably good enough to do it for me. And again, you would expect price, when volatility expands above 20 percentile, you'd expect the price to go in the direction of the trend, but we can always use the Stokes to mediate that. All right, I think I'll jump back into Ethereum and, XRP. This one does line up with my backfill theory. Just getting a backfill on yesterday's massive leg down for XRP. And I would not be surprised actually to see this play out. Just one more drive of bearish divergence. So this, you know, if we popped up, made one more, you know, lower high, just confirm that as a lower high. And that would be the nail in the coffin alongside the third drive up bearish divergence. That would be probably good enough for me to say, okay, the range is going to get broken to the downside. So any kind of an opportunity to short back up here, again, not financial advice, but I'm looking to add to my positions there. And that is if Bitcoin is still playing on the bottom side of the range and hasn't, started to break out again. All right. ApeCoin, another one, taking it on the chin. We got a target down for Ape, down to about 310. Ethereum Classic, again, kind of closed the daily below this level. Yesterday, that was kind of an indicator for me that we are probably in no man's land, meaning there's, we closed below. Did we close below that node? Not quite. So the last node in the sand, we already got below this one. That was kind of the big one, but so could we play out one more bounce first and then kind of roll over, fill out this wick? This wick will get filled. And, that's why Ethereum Classic's got a lot further to go with targets down to 16 and 15 bucks. As soon as we start to lose this region, so the 2-day will cross up today above 2250. So that would not bode well there. And that would be potentially, how would you confirm this as a low? Really, I'd want to see a, daily closure back above 2350. Maybe even this level right here at 2421, but you would have some massive, hidden bullish divergence from this pivot right here. You'd have one, two, potentially one drive, which would give us a pretty good bounce. So if you do see Ethereum Classic come all the way down here and not take out these lows, but, put in a higher low, I would look for some good divergence to play out. Probably a decent bounce when we get down to 15, 16 bucks. All right, that's it for my coins today that I wanted to cover. Again, whatever Bitcoin does, Ethereum's going to do more, and that's going to bleed over into the other altcoins. So I'll be bringing you back another boring day of price action tomorrow. Don't forget, if you enjoyed the video, please do hit the like button or share it or post a comment. Talk to you soon. Take care.